Not all lead types are created equal. Life insurance agents need to understand how to jump from final expense to vet to IUL to mortgage, mortgage to IUL to annuity, etc. And the goal of this video is to show you exactly what the blueprint and what strategies life insurance agents are using to get out of the rat race of one lead type and go to the next, and the pros and cons of each. As always, my name is Trey. I'm the owner of Agent Lead Lab. We've been able to help 550 agents in the past 3.5, almost 4 years. Issue pay $40,000 per month. And on this YouTube channel, all I try to focus on is explaining exactly what those agents have done, what the agencies that are passing $1 million a month are currently doing that we are partnered up with, and other trends that I'm seeing in the industry, and hopefully give you principles that you can go out and implement so you can make more money. Very simple, straightforward. That's the purpose. So as always, please make sure to like, comment, subscribe, drop questions, comments, and concerns, and let's hop into it. And if you are new to the channel, just know these are a little bit longer, so you probably want to listen to this in the car, or have me on 2x speed or 1.5 speed, depending on how you get down. So let's hop right into it. First of all, everybody, it's the top of December. A few quick things I want to throw out there. I didn't record from December, or basically, Thanksgiving Day and Friday. We're back at it in December. One thing before we hop in, if you watch me, you do any marketing, or you know anything about marketing, or you do lead generation specifically for agents, or if you're just an agent that's here to learn, understand that times of the year really play a huge factor. And not only the success of the marketing agency, because you hear a lot about lead costs going up, etc., but more importantly, the success of the client, because everybody is dealing with the same thing. So if the costs go up and the actual agents, right, are dealing with more objections from the clients, meaning that the clients are now in holidays, they want to spend money, there's more chargebacks, it's less closes, the agent is inherently affected. So even me, I'm learning, going almost on 4 years, to really not take this time of the year personal. There's a lot of, I don't even want to say churn, but like, you're controlling people's emotions as agents in this time of the year, because they think that every single month is created the same, and it's not. If you think that, oh yeah, I was crushing it, and then I got to October with this company and it wasn't good. And that's not just for me. Like, I speak for all people that do marketing, which, by the way, like, I'm not a hater. I know that there's some people out here who run, agencies or sell leads or whatever. Like, I'm a huge, blue ocean guy. There's hundreds of thousands of agents, and there's millions of people. There's billions of people, actually, that need, want, and desire life insurance. So like, there's no reason that we all can't coexist together. For whatever reason, there's like this hating spirit in the air, I guess. It's always been there. I don't know. I'm starting to see it a little bit more. But I just want to throw it out there before we hop in. So appreciate you guys for kind of listening to that. All right. So purpose of this video is how life insurance agents can go from next lead type. So I recorded a video on the day before Thanksgiving. So Thanksgiving Eve, or whatever some people call it that. And I talked specifically about, I forget what I talked about. I apologize. But one of the things that I mentioned, and I wrote it down on my notes during that video, is how, and if you want to go back and watch that, because it was very insightful, I was talking about my guy, William Rapp. So one of my friends who does really, really well. I broke down his process and how he, as a life insurance agent, went from final expense to IUL, then went from IUL to annuity, and now owns one of the largest annuity organizations in the country. And I went through and explained us working together, our story, what he's done. And one of the things that I was like, I need to record a video on, is how life insurance agents can go from lead type to lead type. Now, here's the thing. Agents don't want to say this, but a lot of times people are really like, they're nervous about the lead type that they're in. And what I mean by nervous is they're like, man, they almost want to leave the industry because they're running into the same inherent problems and they can't get around it. Now, there's a few different problems that you're going to run into before we go into this. This video is not for you if you cannot sell. Do not think that you switching lead types is going to mean that you are going to sell more, because you suck. If you suck, you suck. You just need to get better. I'll be honest. Like, there's no magic formula. My bad, y'all. It's getting cold, so I got to do my thing. But yes, so there's no magic formula. Like, you still need to work. This video is specifically if you're an agent and you're like, I'm doing 30, 40K in my lead type, and like, I just want to get my time back, or I want to gain more leverage. See, I look at lead types like leverage. Most people look at lead types and they say, hey, I want to write more premium. Good. I like that. I want to not work as hard. You're kind of losing me. I want to avoid chargeback. Yes, but if you're writing bad business, you're writing bad business. What do I mean? I work with tons of final expense agents who have like a 95% persistency. And I work with tons of mortgage protection agents who have a 50, 60% persistency. What's the difference? It is not the lead type. It's how that you communicate with the agent. And here are the reasons that you should be looking to switch lead types. Hey, I want to get my time back. I want to make more per transaction. I want to increase my skill set to get more leverage so that way I can have bigger, broader, and more vast conversations. If you understand how to sell an annuity, right? How to actually take a lead. And these are with leads. Granted, you can sit down and work with somebody. I'm talking about you know how to do, like, set up an annuity properly. It's going to be very simple for me to teach you how to do final expense, how to do mortgage protection, how to do etc. Right? So we're going to go through different ways. So let's talk about the lead types and what I believe are some of the more immediate jumps that you can see in kind of like a very linear progression. I'm going to talk about combos that work. And I'm also going to talk about if you were to just start at one lead type, the pros and cons, and then reverse vertical, which means starting at annuity, learning and actually going downwards and when that's applicable. Okay. So final expense to veteran. This is probably the most common. Now, a lot of people hear me talk about vets. I work with a lot of IMOs, FFL, Pinnacle, Experior Financial Group, Heartland Financial. Not all of them use veteran leads. Veteran leads are more than FFL, Pinnacle. What's the new one there's tons of like different IMOs, but I'm just dropping those because I have a lot of agency owners in that. Just understand, guys, that vet is just a more glorified version of final expense. It's not inherently like different. It's just the same thing, just it's the same thing. It's just a higher end niche. It's just a niche of final expense. That's really it. Now there's veteran IULs. There's all these different things. So it's like there's all these different nuances. But there's neither here nor there. So understand this. Final expense is like the bread and butter. It's like the starter pack. But I think people understand that final expense is a starter pack because it's super simple to sell. Let me take that back. It's super easy to sell. It's also very simple. The problem is that the reason that people want to switch, if you're a final expense agent, the reason why you're probably watching this and you're like, I want to get out of it, is probably because of chargebacks. Let's call a spade a spade. If chargebacks weren't a problem, everybody and their mom would sell final expense because it's so simple. Now, it's simple because you can just tell, hey, when you die, you need to cover your burial costs. Cool. How much coverage do you want? The problem is, and I have videos on this, if you sell that way, you're running from something that is inherently just because you're making the sale so simple that if somebody with any level of skill can come in and attach value to the same number that you pitch the person, they're going to swap the policy. Or if they look at the charge and they cannot justify the $10,000 or $15,000 that they're going to get paid out to their family, just saying you're going to have something that's going to take care of you is not enough to keep these people on the books because they are on a fixed income. Why is that important, Trey? That's important because the jump from final expense to veteran, the only real difference when you're going from this to this is simply you just get a higher premium. That's it. Yes, you can say they have more money, so you get a higher premium. That's why. Let me not just say you get a higher premium. So, but it's still essentially the same demographic. So do not be upset when you run into the same type of things when there's a million, trillion, quadrillion people running ads to these audiences where they're filling out thousands of forms, where they're just seeing the same ad over and over. Like, you're literally dealing with a demographic that's what they do. That's what they do. So because that's what they do, you have to understand that. Now, transitioning from final expense to vet is simply you understanding how to communicate clear with the client. Because talking to Susan, who's 85, is not the same as talking to John, who was a military general, right? A commander, and he's 68 years old. John wants direct, sir, verbiage, straightforward, no BS, straight line. Susie wants, oh, hey, how you doing? Change in tonality, not as direct, right? Like to the point, but not as direct. You kind of gotta, oh yeah, this is why. You don't really need to do all that with vets. Like they know what it is, they know what's going on. They served, like it's not rocket science to them. Now, veteran leads are wonderful if you are a simple person. If you can deal with conflict, you can deal with very alpha energy. I'm not saying male. I didn't say alpha male. I said alpha because there's women as well, right? Still very alpha energy. Like I'm on this, let's go direct to the point. Cool. If you're going to make that jump, if you're going to make that switch, be very, very, very aware, very, very aware of why you are making the switch. Do not jump from filing expense to veteran if you are not a direct, straightforward person who's not going to just tolerate anything. If you're like one of those people that can't, like that's not fit for you, do not go over there. That's not for you. Skip what I'm about to tell you and go from another lead type, which I didn't mean for this to say vet to mortgage, but it still could be vet to mortgage or filing expense to mortgage. You guys are going to get kind of what I'm getting at here. Okay. Straightforward sales, right? So let's go. Like, these are all straightforward sales, right? Very linear. Okay. Sometimes need to push value for policy amounts. That's more prevalent to filing expense. Why? Right? Because you're attaching the value to it. Not that you don't need to do it for vets, but they already are kind of like, yeah, I know I need this. Like, just what is it? Boom, like to the point. When you're not going over what the inherent value is for filing expense, that's when they pivot or they charge back or they don't pay because they don't see a reason to have it. Vets know why they need life insurance. They served in the military. You don't need, even if you don't do it, I'm saying sometimes, but you should always, right? Always for filing expense. Always. Always. Okay. Now, move on to the next, right? Because there's essentially the same thing, but people make like, I'm going from this. It's like you kind of do these simultaneously. This is the jump that most people are afraid to do. They do not want to go from filing expense or vet or demographics. By the way, guys, like if you watch my videos, I'm a big demographic person. Sometimes I like to do this. Sometimes I use the word demographic. I'm not using demographic because in this video, I'm not explaining demographic. But if you watch me, I'm super huge on demographic and behaviors because it tells the whole story of what you should be doing as an agent in order to convert the client. Because we can see, I'm not here to talk about leads. Like I'm here to explain how to sell and make money. Leads is just a byproduct. You need leads, but you instead of looking at leads as leads, you need to look at leads as demographics. You're selling to demographics. You're not selling to leads. A lead is just like when you think about you're buying leads from me or from another company, you're just buying a specific demographic who had a desired outcome through marketing channels. That's it. When you start looking at it like that, you have more success because you don't attach so much inherent value like, oh, this is a lead. It's like, no, this is just somebody within a demographic range who filled out a request for whatever the marketing was. And that goes back to why some agents struggle because they don't know what the marketing is and they don't necessarily understand the demographic. If you don't know the market, if you don't know what the marketing said and you do not understand the demographic, you will not be successful. End of story. That is why people think that people do well on mailers because they fill out, they went out to the mailbox and filled out. No. Reason people do well on mailers is super simple. They know what the demographic is. You're doing mortgage protection. It says homeowners. It says the age. They tell you what it is before you drop the mail. You know what the marketing is because you get a screenshot of the PDF of their writing. So when you call them, you're like, I'm looking at, you have another level of conviction. And it's very assumptive and weird if you're like, I didn't fill this out. You're like, okay, I'm kind of looking at writing. And people can feel that. So all you got to do is find a way to get who is the demographic, what was the marketing. Hey, they're older people. Okay, cool. That's good to know. Here was the marketing. Perfect. I know what to say. If they object, they're older. I don't get frustrated. I'm like, you're probably old, right? It's like, all right. Cool, they're younger. They don't pick up the phone. Perfect. When they do pick up the phone, it's direct. They know what it is. That's part of the game. Like, the more you understand that, the better you'll do. Most people don't take the time to actually learn that, so they lack success. It's you just have to understand that. Whether it's that straightforward to where you ask that every time, or whether it's just subconsciously you pick that up and you understand how to work and how to sell the leads. So veteran to mortgage, or final expense to mortgage protection, or demographic 50 to 85-year-olds to now, that are looking for final expense, to 30 to 70-year-olds who are looking to protect their mortgage. Now, this is the most skillful jump, in my opinion. Okay, I'm gonna go down to here. This is the most, and by skillful, I mean sales. Okay, most skillful, not even skillful. It's the most knowledgeable job. Okay, I don't even think that's how you spell knowledgeable, y'all. So I apologize. There we go. Most knowledgeable job. Okay, we're gonna get down to that. I have a video where I talk about why I believe mortgage protection is the best lead type demographic that you should be marketing to. Why it is, why you make the higher sales, etc. And I explained this in this video, it requires the biggest skill transformation, and most people are not willing to go through that process. Okay? If you're looking to jump from one lead type to the next, if you're going from vet or final expense or younger demographic or older demographic to a little bit younger to homeowners, it requires skill, right? Because you have to be willing and understand how to sell all age types. The biggest objection and the problem with agents is they're like, I'm selling a homeowner, I need to sell term. Stop. That's false. Stop thinking that. You're losing out on a lot of money. You're not really helping agents, and you're being lazy. Losing out on a lot of money. Sorry, not agents. You're losing out a lot of money. You're not helping as many clients as you should, and you are being lazy. It's super simple, right? Okay. Why are you losing out on a lot of money? Well, let's just keep it simple, right? Losing out. There is tons of hidden value premium per client. Okay, losing out a lot of money, right? What was the second one? Not helping client truthfully. And then lastly, losing out a lot of money, not helping a client truthfully, and then, being lazy. Okay, you're losing out a lot of money because every client, if you understand how to sell the client properly, and you're not being lazy, which we'll get to in a second, you should be selling in 3 ways. I explain this in my videos, okay? Very, very simple on how to sell these clients. Number 1, you're gonna sell for the asset or the inherent mortgage. My apologies. The asset or the mortgage. The assets, I apologize, or the mortgage, balance, loan, whatever. You're gonna sell to protect that. That does not mean pay it off. That means protect it. There's equity protection. You can pay the whole home off. There's tons of different ways that you can pitch it. I'm not going to go there. Ask your upline. Maybe I'll have some videos in the future. Very important. That's number 1. That's what most people think is all you do. That's why they don't make a lot of money. Here's where the money comes in. There's 2 other things. Most homeowners, not most, sorry, a lot of homeowners do not always have final expense coverage. You're like, what does that mean? So that's end of life. That's the second. Okay. End of life. Right? That is not the same as protecting your mortgage. We're like, well, I paid my mortgage. It's like, no. You don't even have, okay, you died, right? You got to pay for the asset. Perfect. You have to pay for the funeral. Why would you use your savings? You're already building up. Why not attach it? Attaching that makes you more money. Why does it make you more money? Because instead of you selling, let's say you are not wise and you only sell to protect their home, which would be dumb, and they don't have final expense, which will go into helping the client, then if it only costs them $100 to cover their mortgage, you're done. But if it costs $100 to cover their mortgage and you put another $25,000 of final expense coverage on top of it, by final expense, I do not mean that needs to be a whole life. You can do that if you want. I just mean you add it to their term. Now their $300,000 mortgage protection is $325. So now you go from maybe $100 a month to $115 a month. I'm just making that up. I don't know the numbers. You all get the point. That's number two. Number three, supplemental income. You die, okay? Mortgage is paid off, great. Or you're covering the equity, great. Final expenses are taken care of, so burial is good. That means that the thing that was static is taken care of. The thing that needed to cover you when you died is taken care of. What does your lifestyle look like? Because yes, you can say, oh, I'm going to do this, I'm going to do this. Can we provide and maintain that lifestyle? I don't care what you say, even if you get all of the money, right, and you pay the house off, you just paid the house off. That money should be to pay the house off. Or you could use, what is supplemental income? Okay, well, John makes $120,000 a year. Am I saying that you need to do an extra 120? I mean, maybe. I don't really think, if the price isn't too crazy, I would add that in there to have three options: gold, silver, bronze, beginner, intermediate, advanced, basic, whatever, however you want to pitch it. But you can mix and match the combos based off what they're looking for. You start attaching value. Oh, well, Sadie has to pay for school, so how? Supplemental income to provide for the day to day. So you have your day to day. Let's say now that is an extra $150,000. So 325 plus 150 is $475,000. Now you have an option that costs $100 a month, $115 a month, and then $230 a month, or $180 a month. Now, based off what we discussed, which of these is the most important to you, and which package was going to make the most sense for you, Sadie? Or reverse engineer and close. I'm not here to do that, but you guys get the point. That is the three ways. If you are not doing that, you just lost on a lot of money, because most of the time people, it's only $100 a month. They might pick the 115 or the 120. Cool. You just made an extra 20. What do you mean? You just made an extra $400. Go into the next thing. If you don't do that, you're not really helping the client, because you're just providing them with their mortgage. When in reality, if you just ask better questions, right? And stop, last one, being lazy. That's lazy. You're like, that takes too much. The presentation is too long. Dude, why are you doing this? Like, genuinely, like, are you not here to help people make sure their family, is this not real to you yet? That when people die, they need money? Like, because, dude, like, you do understand when they die, if you don't have life insurance, like, they're screwed. A lot of these people, even if they say, I have all this money, it's like, dude, people are losing. They're one day away from losing their job and not having. You think if they die, which essentially means they lose their job, their assets not paid off, and they don't have their final expenses taken, that they're going to be okay? You're going to walk out that house or get off the phone without believing that? Dude, that's being lazy, man. You're not taking the next extra steps. You're not actually helping the client, truthfully. If you sat down and cared about the client, you would do what was necessary. But because you don't actually care and you're being lazy, you won't make the jump. Now, the reason why people won't do this is because people don't really want to do the work. It's just like anything in life. But if you can get to this lead type, it will change the game for you forever. Why? Because when you make this jump, the reasons, as I mentioned earlier, when you're making jumps should be based inherently in valuable things that you can gain, leverage that you can get, or more value that you can provide your agents. If you're an agency owner and you only know how to sell 1, 2, maybe 3 lead types, you are literally not allowing your agents to grow. Because here's the thing. If they don't get it from you, they're going to get it from somewhere else. It's just like a parent that's like, hey, I think leaving my kid in the house and not letting them expose to the world is going to make them not want to explore the world. I'm like, no, that makes zero sense. If you don't expose them to anything, when they do get exposed to it, they're going to be hyper, I don't even know, you get the point. But basically, they're going to be more likely to take action because they've never been exposed to it. But if you suddenly expose somebody, or if you educate and expose someone, they're more likely to not take that action simply because they're not like, oh my goodness, shiny object syndrome, I've never done it. I really want to do it. I really want to try it. And then you don't know what's on the other side of it because they've never done that before. So as an agent, It's the same thing. If you're an agency owner, if they don't get it from you, what's going to happen? They're going to go find somebody else, and they might end up switching or taking their agency somewhere else, which typically is what happens because people are lazy. People are just lazy. They're lazy, they're lazy, they're lazy. So when you make this jump, most people are afraid to make it because they're like, dude, that's a lot of work. Oh my goodness, I have to learn how to sell somebody 75 years old. Wow, that's so hard. I can't do it. You're lying. You can do it. There's tons of agents that do it. You're just too lazy. So don't lie to yourself. Be honest. You're not willing to do the work. Oh, they're 75. They're not healthy. So what? So you don't think that you want to go back and forth with them? I need it to be like a lay down and they got to get term. No, you're just not good. And if you think that that's why you can't make money, you're just fooling yourself and you're losing out a lot of money and you're not really helping the client. Because the point of the fact is, if they're 72 years old, they got approved for a loan, whether we like it or not. So if they die, they still got to pay for that loan. So if you're saying that you're not willing to do anything to help them, dude, that's trash, bro. I'm just gonna be honest, that's trash. Like you're being lazy. And you can't make that jump. It's just simple. You're not willing to make the jump. Cool. But here's the thing. This jump is huge because the amount of skills that you learn are going to transcend into the next. They're going to transcend. So when you're looking to make that jump, you need to focus on a few things. You probably need to go start watching YouTube if your upline is not already doing this. You need to start educating yourself on the actual homeowner status. Like, dude, most people are just like, because you're dealing with this different demographic, you need to understand like how loans work. You need to understand how refinancing works. Like you need to basically act like you're a mortgage officer who sells life insurance. Super simple. You need to understand how different, you need to see the trends in the market. What's going on? Like if you really want to be elite, you got to take the time to do that. Okay. Now, next jump. And I'm being broad. So if you guys want me to go more in depth on any of these, just drop comments below because I got a lot of stuff to go through. Mortgage to IUL. Now, to me, this is like a very horizontal adjustment because you're going to naturally run into a lot of people who want to get into IUL or advanced market. Let me just call it advanced market for all my people out there who are like slash whole life, whatever. They don't believe in IUL. I'm not trying to offend anybody. What you need to understand is that people want to have conversations about reallocating funds. Let me use the word investing. Reallocating funds. Because they want to have that conversation, this is not that difficult to get into. But to master and do it well, here's the thing. Do it well for the client. Just do it. Agent. Here's what I mean. Because so many people are open to that conversation and they lack the knowledge, and you are the trusted, licensed, legally, prescribed, legally allowed to prescribe the medication, which in this instance is going to be the life insurance product that is going to help them reallocate their funds. They do not know what they don't know. It's not like a 401k or a Roth or anything like that. So you are the person that they trust, to whom much is given, much is expected. Because of that, as an agent, it's very, very, very simple to get in and sell these bad boys. The problem is, are you doing it well for the client? Or are you doing it well for yourself? And that's all I'll say. I'm not here to say whether one is right or wrong. It's not my prerogative. This jump, horizontal. Okay. And all that means, for those of you all that do not know, is that like from vet or final expense to mortgage is a huge vertical jump, meaning like it takes a lot for you to learn. Like you're jumping and you're having to do like new skills, new abilities, new leads. Exactly. This is horizontal. So if you're at mortgage protection, even if you're at final expense, it's still pretty simple. Like you're not having to learn all the, because you're just selling one thing. Now, here's the key, and I just want to hop back up here. I love talking about sales and life insurance because it's just what I love to do. When you're dealing with final expense clients, clients, so that demographic, when I talked about value, you should be pitching those same three things for final expense and for mortgage. The difference is it's the order in which you pitch them. You pitch final expense first for final expense, then you pitch supplemental income, then you pitch their mortgage. That's the order. For mortgage protection, you pitch mortgage and assets first, then you pitch final expense, then you pitch supplemental income. So the order is different, but it's the same thing. I just want to be super clear on that for those that have lasted this long in the video, and I appreciate you. If you do that, like you need that's the order. You have to do it in that order. If you do it in another order, you lose trust with the client because they're like, wait, why are you talking about that? Like if you come in, you're dealing with a final expense client and you try to like close them on their mortgage or their rent or whatever, it's like off. But if you start with final expense and then so like that's your lowest, and then you go final expense and supplemental income, then you go final expense, supplemental, and mortgage payments or equity or whatever, it's perfect. Silver or bronze, silver, gold, or gold, silver, bronze, however you want to reverse engineer it. With mortgage, if you come in, you're like, yeah, we need supplemental income. You're like, whoa, bro, I thought we were here to talk about our assets, right? So you stack them properly and then you close properly based on that. I just want to say that. When it's the reason why I'm saying when you do something like an advanced market IUL whole life plan and they want to talk about reallocating their money, it's horizontal because typically the skill set that is required, it's not as big of a hurdle to jump over because the first thing that you're talking about is actually not in any of either one of those. It's not in final expense or mortgage. The only thing that you're really talking about is where they put their money. The other thing is all the other three categories. So it's almost four. The difference is that you can stop right there. It's just like with final expense. You can really stop with that. The problem with mortgage is what I'm saying is the problem with mortgage is you cannot stop with just saying their asset because there's other problems to solve. And anybody that's smart is like, well, I can use this for this, this, and this. And then that's why it doesn't work as well. And that's why agents struggle because if they come in and they want their whole mortgage to be covered and you don't understand how to actually pitch assets, that's a whole nother skill set. Pitching people and like they understand, like, hey, dude, I put this much money in. These are my returns. Like it's simple. You're not selling them on a concept. Like there's no concept here. It's like you put money in life insurance, it grows tax. Like you know what I mean? That there's nothing else to it. They saw that in the ads, so they opted into. On mortgage protection, everybody that comes in can't get it. So that's the benefit of doing like IUL, whole life, whatever, leveraging life insurance for retirement options. Is that kind of everybody can get it. And by I mean get it, I don't mean they can qualify for the IUL, but they can use life insurance for that reason. So you're not going to like, I hope I'm saying this properly, but that's what they came in the door for. You're not battling them wanting to cover their home mortgage. It goes back to what I said at the very beginning. If you know the demographic and you know the marketing, you know how to start the conversation. Most people don't even know that. So when they get into these IUL leads, they struggle. That's the struggle. That's the jump issue. It's not as much. That's why it's horizontal. It's just like final expense. That's why you see a lot of people go from final expense to IUL and skip mortgage because it's like, okay, these people know what it is. It's the highest intent demographic because they want to talk about making more money. So like everybody wants to talk about that. So they're very open. It's not like, oh man, I already got to take care of, hang up. It's like, okay, let's talk. What else can we do? Then you have all the other things that we discussed. You can cover your mortgage, you can take care of supplemental income, but typically you just stop with that because a lot of times if somebody's at the point where they think it's important, they probably already have life insurance or they're thinking about what to use life insurance. If they know that it's life insurance for growing their money tax-free or for retirement or for retirement planning, reallocating their funds, they probably already inherently understand the value of life insurance in general. They're just trying to figure out how do I do this specific thing within life insurance, right? So it's still a simple and easy sale. It's not really like rocket science. The thing is that you do need to have knowledge. Now, it's not the most knowledgeable jump. We'll talk about that next, but you need to have knowledge. You need to gain knowledge. Now, it's not the reason you need to gain knowledge is because you got to do right by the client. If you want to be crazy and just sell them, simplified issued IULs, like, I guess that's fine, but it's like not really fine because you're not really giving them what they asked for, right? That is mortgage or filing expense, right? I'm going to say mortgage or filing expense. I just wrote these out, guys, before, so, bear with me. Here is the one that we talked about on the video that I believe is the jump that everybody should make if you just plan on doing solo writing, right? It's the most leveraged play and jump. And by the way, when you go back up to this one, when you talk about leverage, you're not really, you are, but you're not. Like IULs and whole life plans aren't as glorified as people make them, because if you do it right, you don't really get paid that much. Most people jump from filing expense to this. I don't see a lot of, some mortgage agents jump, but it's typically vice versa. They'll go filing expense, IUL, then go mortgage, because you can sell all through, which, by the way, I didn't say this on the mortgage protection, but theoretically, you can also sell like retirement in there, but I broke that down in the video. Back to the point at hand. If you structure these policies properly, you're not really making that much money. So it's not a huge like AP jump. It's typically a time jump. Like agents are like, yeah, I'm doing 40K in filing expense, but I'd rather just be doing 40K with like IULs, because I don't really feel like dealing with the clients. They just want to deal with better clients and make the same amount of money. So yes, you get a little bit of leverage on time, but it's not super drastic, because it may feel like that, but understand, yes, you do have to call leads all day with filing expense, and it takes more leads to call, but you're still kind of putting in the same amount of time when you really look at it, because the follow-up game with this is like extended, and everybody's not available throughout the day, right? Like they're like busy. So you can't just be like, oh, yeah, I'm going to do that. IUL to annuity or filing expense, it's like some level of advanced market to like true annuity is like the most knowledgeable jump. I broke this down with Scotty. This could take you up to a year sometimes of just like consistent work, unless you have mentorship and guidance. Like if you're doing it on your own, you need to understand how to properly set up structure annuity. But bigger than that, you are competing with financial advisors. And for those who do not know, financial advisors and life insurance agents don't really love each other. Very different ways at looking at the world in regards to finances and money. Not extremely different, but different. Not to say one is right or wrong, and I'm not even being biased. I don't fully understand their world, so that would be me being biased if I had to put my 2 cents on it. But they are different. So because you're competing with financial advisors, you have to go learn what they do. Your competition is not their ignorance of where to go get life insurance. Your competition is the financial advisors, and them being knowledgeable on what an annuity is, how it works, which one, like, so you got to come with some sauce. Like, it's not just, oh, yeah. It takes an immense knowledge jump. Skills as well. Definitely more knowledge than skills, though. Because if you've gotten to this point, you're pretty skilled. You know how to sell. You just need to understand what you're selling, why it works, and what other people are doing, so that way you can create a sales process that mimics what they're kind of already experiencing, but also providing some different, unique value. Now, here's some combos that can work, right? That I kind of like, that I think kind of go hand in hand. I think that mortgage and annuity / advanced market / IUL, or whatever you want to call it, is by far the best overall combo. Okay? Reason being, homeowners typically are what? 50, 70, 75? Okay? Next, because those homeowners are that age, they typically understand investing, want to invest, want to leverage their money properly. So it opens up more conversations. The next combo that works is filing expense, mortgage. Everybody knows this. Bread and butter. Why do they work? With the jump. Very simple. People will go from filing expense to mortgage, right? and it work side to side. Okay. Here's another one that I like. I don't love it, but I like it. I think final expense and IULs go hand in hand. Most people are like, oh, why? You can pull a lot of those out of traditional final expense demographic because you're still dealing with that 40 to 85-year-old. It's not as many like homeowner-esque people, but still really solid. Now, I'm a firm believer that starting off with one lead type is probably the best thing you could do. Now, if you're never exposed to it, you don't really know it's out there. The cool thing is, though, that if you are exposed to it, you know it's available, you're going to crush it. So I think about, okay, one specific lead type is a great way to start. If it was me, I would start them with mortgage protection. I would educate them on that, and I would use after they, finish licensing to just educate them on how mortgages work, etc. Because in a perfect world, that's all I would build my agency on. Because I'm going to cross sell everything from that. That's me. Now, one could say you should do final expense, you could do this, you could do that. Like, that's cool, but that's just me, right? Regardless, if you start out on one lead type, you should have a progression. Okay, so let's say that you're starting out on final expense. You should say, hey, in 30 days, after that, you move to mortgage. After that, you move to this. Progression, right? Or you say this is just what we do. But if you're going to say this is what we do, start at the top. Okay, hey, like we do IULs, we do annuities, whatever. Much easier to make somebody do something very difficult and then teach them how to do something easier than teaching them how to do something easy and then giving them something super difficult, especially when they're making money. Because why stop doing something that's already working? It's hard for you to rationalize that in your head when you went over, because no matter what, you're gonna have to go through challenges, right? So if I go through challenges and learn how to do final expense in like 10 days, and then you're like, yeah, I gotta spend 60 days to figure out how to do mortgage protection. It's like, I'd rather just keep making the money I'm making. And then typically people stay where they're at. But if you make it challenging from the jump, you're good. It's like, hey man, we're gonna run 2 miles a day, and then we start running. We do that forever, and then I'm like, yeah, let's sprinkle in like half a mile. You're like, oh, this is a breeze. But if I'm like, yo, you need to start with a mile, and I'm like, yo, if you just start running a mile a day, and I'm like, yeah, dude, now we need to start doing 2. You're like, damn, all right, but sheesh. So you gotta and think about agents and money. That's just like stuff that's hard. We're talking about making money. It's like, well, I mean, I'm making 30K, and now you're telling me I'm going to lose 10K, and I have a whole video breaking that down too. But like, that needs to be how you think through things. Now, vertical is final expense to vet to mortgage to IUL to infinite banking, whole life to annuity, right? Like that's vertical, straightforward. Reverse vertical, typically, you don't start with annuities, just being honest. Most people never just go to that because you need to have some sort of base. Reverse vertical is you start at IULs and you work down. So you're like, hey, this is all we do is IULs, but then we're also going to do mortgage, and then you learn how to do final expense. So it's kind of like you're reverse engineering how to downsell, right? So I hope this video helped. This was a lot longer than I kind of expected it to be, but that's okay. That's how it always is. Please make sure you like, comment, subscribe. Tons of stuff I went through. If there's specifics that you want me to like break down and explain, more than happy to do that. Biggest takeaway from today is really just understanding that every lead type has its nuances. You should not be trying to switch from a lead type for the sake of running away from chargebacks. You should also not be trying to switch from a lead type if the only reason you want to switch is because you just want to make more money. It should be leverage. Your thought process is, how can I gain my time back? That's number one. How can I then give my agents a way to become more profitable? That's number two. Right. And then number three is going to be focusing on how can I increase the overall skill set so I can offer more to my agents so they don't feel like they have to go elsewhere, so I can create an all-encompassing business. It's just that simple. Now, if you're lazy, it's not going to work. If you don't want to put in work, this is not going to work. If you think that you're trying to switch lead types to get the easy way out because you don't want to do the hard things, that's also not going to work. If you're trying to do all this and because you get chargebacks out the wazoo, don't think that you switching lead types is going to make miraculously all of your chargebacks disappear. Now, will certain lead types have better persistency? Yes. Is a mortgage protection, is an annuity client going to have better persistency than a mortgage protection? Yes. Is a mortgage protection client going to have better persistency than a vet or a final expense? Yes. Is an IUL client, if you do it correctly, going to have better persistency, then mortgage, yes, yes. If you do it right and if you're not lazy. Being lazy for IULs is, dude, I'm just gonna sell this guy simplified issue, get in and get out. That's gonna come to hurt you because in a month or a year, if they fill out another form, they talk to another agent, guess what they're gonna say? And here's the thing: if you do life insurance, you know that you can leverage life insurance to grow your money tax free. So you don't think that that's gonna come up? Hey man, I already got a policy. Perfect. Let me see your illustration. Wow, this is garbage. Did you read through it? No. Boom, cancel. Yo, so if you don't do right by them from anyways, you're gonna get so it goes back to like if you're not good at writing good business, you're not good at writing good business because these traits they transcend every single lead type rather into the agent and what the agent does to actually help the client. So as always, please make sure you like, comment, subscribe. If you're an agent or agency owner and you're like, look, man, Trey, I really appreciate this. I want you to break down my business for my agents so that way they can be successful. Be more than happy to do that. Please book a call. Go to agentleadlab.com. There'll be a book a call button. If you're an individual agent, and what I mean by that is, if you're an agency owner, I apologize. You're doing over $200,000 a month. You've got 3 writers doing at least 20K. I would love to potentially partner up with you. You can fill out your form. Our packages start no less than $5,000 a month. Okay, super clear, super straightforward. Some of them are custom if you have a bigger agency. So don't waste my time. Don't waste your time. You can get on the call. If not, go to leadlabcrm.com. On there, you can simply just have like, hey, look, Lead Lab CRM, boom. You'll have all the different lead types we have. We're coming out with new lead types all the time because I'm always constantly testing things. I'm getting a pulse from my clients and my agency owners on what's working, what's not working. So I get a really thorough, wide scope of exactly like what we should be doing. And then from there, we create different lead types. So like as this recording, we have something called an instant IUL. It's basically anywhere from $12 to $15. Leads come in, you order them in packs of 25, 50, or 100. People are closing. If they're getting 50, I mean, I've had one person close 5 deals already off of that. So like, that's absolutely insane. It's about 10%, which is phenomenal considering the average annual premium is about $2K, right? So we're $10,000 off a $600 pack of leads. Really, really, really lovely. Then we have like text verified, aged leads, like kind of wherever you're at. If you're in the journey and you're like, dude, I don't have a big agency. I don't have at least 5K to invest. It's like, I don't really want to waste your time. So please don't waste mine. It's kind of how it works. So it's not really anything else outside of that. So yeah, hope I can help. If not, just keep watching the videos. So I will see you guys next time. Peace.